Hi there, welcome to a new episode of We Are Funded Trading Plus. My name is Andrew Lockwood. I'm the new Head of Education here at FTP. Stay tuned to hear my adventures in the trading pits of the City of London and how I can help you in your trading.
So for somebody then who started back in mid-80s, how was it for you firsthand, the evolution of trading, moving from the traditional into the new era, essentially, with the digital trading?
It was vastly different. Maybe down to, I've never considered myself arrogant, but as a trader, you've got to have a certain amount of
belief,
confidence.
Confidence.
Swagger.
Yeah. But when you get onto the trading screens and you're arrogant, confident, and have swagger, it's dangerous. So I lost a ton of money. So I came back in 2005 and I started, I had a choice. What do I do? Do I go and drive not Uber in those days, but do I go and drive a taxi or do I carry on trading? Well, I'm a trader, right? So I'm a trader, so I'll carry on trading. And I lost a ton of money, 130 or 40 grand, something like that, of my own money, thinking I could trade on the screens. So it was a massive, massive shift.
What did you find so different?
Okay, so when I was in the trading pits, I didn't have Bollinger Bands and MACDs and RSIs and CCIs and what have you. I looked at people's eyes. People's eyes, I could tell if people were selling. If Goldman Sachs came into the trading pit, for example, and he's looking at all those guys with their hands out like that. Remember, these are buyers because their hands are out like that. If Goldman Sachs are looking at all those guys with their hands out, I know Goldman Sachs is a seller because he's counting up how many he can sell. That's the indicator I used to use. If I could sell my little 5 contracts before Goldman Sachs went sold, I've made the money for the day. So
that's crazy, isn't it? Imagine just being there and knowing. Was it? Be honest. Was it easier trading then?
It was. Yeah, I think it was easier. Because I'm not going to go into some of the things we've got up to, but I mean, it was a much, otherwise, law of statute limitations is something like 7 years or something, so I think I must be okay.
I think you'll be all right, yeah.
No, but we had other little techniques that we could, sort of use to get ahead of the orders, if it were. But the other thing, and this is, back to the psychology side of things. If you're in the trading pit, whether it's working for a bank or working for yourself, if you're losing it, if you're revenge trading, if you think you're bigger than the market, and you think you can take it on this market, and everyone is saying, Goldman Sachs are selling, and JP Morgan are selling, and they're all selling, and you're saying, no, this is not going down, it's going up, and you're buying, and it's just going down further, and you're still buying, and all that, Everyone knows what you're doing.
Yeah.
So as opposed to being at home when you got your mouse and the thing, and you're making a cock of yourself, when you're in the trading pits, everyone knew. So it's almost like a...
Do we have accountability?
Absolutely, because everyone knew if you had lost the plot.
Yeah.
Everyone knew if you came back, smashed out your face and tried to take on Goldman Sachs. Everyone knew it. He's going one way. But on the screens, it's very easy to fall into those traps because you're not accountable to anyone apart from maybe your partner or something.
It's a powerful point.
Yeah, that was very true.
Of why a sense of community is really important in trading and trading buddies and things like that.
Well, that's why that's one of the pros of trading with trading with prop, because you're accountable. Yeah. You can't lose the plot, otherwise you lose your account. So that's why it's good to have rules that we stick to, and obviously our rules are designed to help the trader grow as opposed to blowing up the account. So it's really important for that, and I found that as a cold awakening for me back in 2005, 2006. But I changed things around. I did have a couple of weeks away to the aeroplane, and we sort of thought about what I was doing, and I just basically took it back to my days in the trading pits.
Yeah, so just talk to me what it was like actually losing the 140, 150,000, because we do talk a lot about psychology on this podcast. So just talk to me about what was the first things going through your mind?
Well, okay, so that wasn't my money, right? That was the company money.
Okay.
Yeah, so it was the company money. It wasn't my money, but but it also meant that I could be out of a job, and it must have meant I wasn't going to get my bonuses for the year or for the quarter or what have you. So, it was devastating. But it wasn't my money. So I wasn't emotionally affected by the money at that stage. I was just thinking, gosh, and also if I lose my job because of that, chances are I'm not going to go next door to another bank and get a job straight away. So I was more concerned about that. But certainly when I was a local, I had, I was a very small local trader, local member, own money. So I would have a very small sort of base 50 grand or something in the account. So I was just trying to make enough money to pay the bills. I was never shooting for the stars, but I had a personal limit. If I'm down £1,000 on the day, that's 2%. I'm walking out on the train, go home, sit in my garden or something like that. So I had personal limits. I think I was quite good in that I could do that. I could lose it by 9:05 in the morning. I'm on the train home again. I'm thinking, well, just people coming to work. I've done a day's work. I've done a grand, and I'm going home. But I mean, but that didn't affect me going in the next day, because it's the same as trading now. We all know that no one has winning days all the time. You have to be able to accept the losses, because if you can't accept the losses, then you're on a spiral down to the poorhouse, basically, I think.
Yeah, absolutely. I think that's the reference of funded trading, isn't it? You set yourself a daily loss limit, for example, like you were saying, 2% was your limit back in 2005, and it's so important, isn't it? Because what I found,
it's still discipline.
What I found is the days where you start off with a loser, the day never really gets better, do you know? But if you start off with a day that starts really good, for example, the day tends to be good. But it's starting off with a loss, isn't it? Once you have that first loss, it's never really going to come back.
Well, I don't know about that so much now. I mean, now that certainly 2006, as I told you about my sort of rebirthing myself, I would never be risking 2% now on a trade now. That's ludicrous. I know I'm going to have a whole bunch of winners and a whole bunch of losers, and a whole bunch of winners isn't going to make me rich, and a whole bunch of losers isn't going to blow me out. Yeah. So ultimately, as long as I'm following my trading rules in terms of strategy and so forth, I don't mind having the losses. Mm-hmm. I think 3 or 4 years ago, I remember talking to my trading room about it. I think I had like 11 losers on the account, right? Well, I'm risking 0.25%. I'm not blowing myself out of the water. I've just had a really bad run. I learned from that because it was too much correlation, but that's a different story. But the point being is, you shouldn't let the losers, dominate your day. Dominate your day. But again, with props, we have a daily drawdown limits that you can't exceed, and quite frankly, you shouldn't exceed them.
You say that all the time, don't you? They're there, but you should be hitting them.
No, you shouldn't be. You shouldn't be. They're hard limits, aren't they, to make sure we're all right? But no, you shouldn't be hitting them, and just have that long-term perspective instead of just trying to get everything done in a day. That's really, really important. It's like I always say, there'll be another trading day. There'll always be another trade. There'll always be another trading day. It's like people are like, oh, can I get? Yeah, I've just passed. Can I get my live account in 30 seconds? It's like there'll be more trading days. Just keep that perspective. And it's difficult thing to develop at first, but eventually, to those who are still in the game, they do develop that.
Well, that's exactly, hopefully, what I'm going to be adding to the team here. But I mean, maybe you come to that later. But I think, trying to jig the mindset a little bit to, give people the right sort of foundations, to achieve the trading goals, and that's one of them. Yeah.
You said something super interesting. Then you talked about the rebirthing of yourself, Andrew. What do you mean by that?
Okay, so. This was down to strategy. The psychology, I sort of, I certainly had it when I was in the pits, but I found myself struggling initially, and I think that was to do with the fact that I didn't have like an edge, a strategy. I didn't have confidence in what I was doing. I couldn't look at the people's eyes. I couldn't look at the hand signals. I couldn't do all the other dodgy stuff that I might have been doing. Strike that one. So I took it back to. There's a guy that used to work on the floor, right? So we're all the young guns in our coloured jackets, shouting and screaming in the trading pits, right? And normally, when the market was breaking into a strong trend, the noise level would sort of heighten. Yeah, it'd be like it'd get louder and louder. Everyone scrambling to buy, and the shorts are struggling to get their the shorts back. So the noise level would move, and that's when you knew the market was moving. And there's a guy that never used to stand in the trading pits. He always wore a suit, just a regular suit. Wasn't wearing a trading jacket. He was older than us. He was about 30.
Very old.
I remember his name. I'm not going to mention it on here just in case he listens in. But he would just be standing there at the edge. He had all the Rolexes and the Rolex to match his tie and all that stuff in it. But when the noise level dissipated, that generally meant the trend has finished. Right? It's not like looking at support and resistance now. We didn't have charts. So that normally meant that it's going to level off And all these people that had bought, they can think, hang on, I now want to take my profits, and it's going to reverse. So he'd walk in after the noise level had dissipated and just go the other direction. So imagine everyone's buying, going quieter. He'd just walk out, sold, knowing that everyone's going to take profits, and then he'd clean up. And he'd come back a minute later and go, buy him, and he's made his, and he was seriously big. I mean, this is nothing like me. He would have made $1 million a day, no problem for him. I mean, he was serious. So I developed a strategy in 2007, 2008, which basically did the same, using what we now know as support and resistance, using basic price action. Just a very simple strategy. Of course, there's risk management rules on there as well. So I basically taught my community of traders over the years and how to trade this strategy. It's designed for longer term traders, but you can use it on shorter time frames as well. So just basically keeping it simple, rather than using all these bloody things that I thought, worked with the crossovers and that and the overbought and oversold. What do you mean overbought? You're above 70. What's that mean? You know what I'm saying?
Yeah.
Who says it's overbought? It's only overbought when it keeps going up and up and up. And anyway, so I just I really took it back down to basics, and I think that's what really helps me. And also, I wasn't, as I said earlier, shooting for the stars. I didn't need to make mega bucks every trade. I knew sort of basically the law of large numbers, as I always call it. I mean, so that's basically what I sort of changed my mindset, changed my approach, and just what do we call it? Keep it simple.
Keep it
that's
simple,
what it was,
stupid.
Yeah. So that's basically what it was for me. And of course, we've developed other strategies since then for different sort of style of traders and all that. So
that's actually really cool.
You've
actually tried to replicate what you've seen in person with what you see on the charts.
But it's madness. I wish I got that 150 grand back, because I don't know. For the first 2 years, while I was trying to outbeat the market, it was a stiff learning curve, and I wish I'd have known it then. But
sort of different, because you never used to have candlestick charts then, did you? When you using the person, obviously. So then when you've come onto the screens and you start seeing candlesticks.
Well, we didn't have candlestick charts, but I don't even mention there. Okay, we employed these are traders, but a yellow jacket is known as a runner or like a gopher, just basically just admin. Go for this, go for that. So we gave her this. I remember we gave her this sort of like grid paper, and we used point and figure charts. So if it goes up, you put an X, and if it reverses 3 pips, ticks we used to call them, it goes down to zeros. So you'd have lots of X's going up and zeros going down.
Okay.
Yeah? And that was our charts, and all the other locals would come into our booth and look at our levels. And I thought to myself, if her boyfriend phones up and she's talking to her boyfriend, she's missed some of the market activity. The chart's completely wrong because she's not been updating the chart. But that's what it was like.
That's crazy.
Just man-made charts.
That is so
we didn't have any of that stuff. No, I mean.
You spoke about indicators. What's your take on indicators, Simon? Because obviously you've been training for a while too.
Not massive fan of over doing technical indicators. I mean, I think once an indicator always is just a derivative of the open, high, low, close, sometimes volume. So, if the market's blasting up and down, that its chances are, like you say, the RSI is going to be over 70 or below 30, isn't it? So it never really interested me, because I was always a very short-term sort of trader.
Like price action as well.
Yeah, short-term price action. So not technical analysis, but maybe if it works with some point, maybe it works with people.
Do you think you could have made it in the pits?
I'm not sure I've got the attention span.
No, I think you would have loved it in the public sector.
I think the energy and stuff, it would have been awesome, and the social side of it, but I'm just not sure I've got the attention span. I probably switched off and been like.
How long of the days were they?
No, so as I said,
60 and then disappear, go and just get distracted by some colours or something.
Well, I don't know. As I said, I used to, towards the end of my sort of job working with the banks, I was a deputy floor manager, wasn't? So I would employ traders. As I say, would tell pretty quickly. And I don't know. I think you would be on my list of you must have got something, because you don't need high education. You don't need that. You just need to. It's instinctive a lot, but I mean, and desire to work hard. So I think you would be maybe underselling yourself there.
I'd love to have seen it.
Yeah, exactly. And can we bring these back? Is there any way
Yeah,
to
I'd love to. Yeah,
make a local one. Manchester Pit.
The Manchester Pit. Yeah. I wonder if that catches on.
Selling coal bonds.
Thank you so much for watching. Hope you enjoyed that one. Stay tuned. There's more to come.